Hey everyone, and thanks for jumping back into the precious metalverse. Today, we're going to talk about gold, and we're just going to be providing a general outlook. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out Into the Cryptoverse Premium at intothecryptoverse.com. What I'd like to do here is go through gold and talk about a general market outlook based on what gold has historically done. The last time I did a video on gold was probably about a year ago, and it was when it was around 2000 or so, around 2,000 dollars per ounce. Now, if you guys remember what I said back then, my expectation was that it would follow something similar to 2019, right? Where it's pushing up against a ceiling and then it finally breaks through around the time that Bitcoin puts in what you might call a mid-cycle top, right? Where then Bitcoin kind of trends down for at least half a year. Gold did that in 2019 before rate cuts arrived, and it's also done it in 2024 before rate cuts arrive, right? You can look at interest rates, put them on the chart, and you can see that in both cycles here, while it's easy to assume this time is different, both cycles gold broke out before rate cuts arrived, right? And then gold broke out here before rate cuts arrived, and then it goes on a pretty impressive rally. So back then, after gold broke out, it rallied about 50%. Now it's already rallied about 27% from the breakout point. So what I want to do is think about, what did I say back then? My speculation back then was that gold would rally likely to approximately 2,500 and then get a pullback. Well, this was back in almost 2,000 an ounce. It's gone past 2,500. I'm pleasantly surprised, right? I have a gold position. I've said that many times. I will reiterate, for most crypto investors, gold is not something they're going to be interested in. And I'm not trying to convince you of that. I'm trying to say, look at it as a signal more than anything else, right? If you're a crypto investor and you don't care about gold as an investment, you could still have used it back in March of 2024 to say, look, if it follows what it did in 2019, it means Bitcoin's likely going to put on a mid-cycle top, and it's going to trend down for at least the next 6 months, right? You could have known that back in March when everyone was screaming at you that something else was going to happen. Just look at gold. It was a signal more than it was an investment for a lot of crypto investors. I will say, over a long enough period of time, gold does underperform the S&P 500, right? It does. But you have to wonder, right? There are people that are insanely bullish on gold, and they always have been, and you're like, well, why? Why are they? There's a reason people get like that, right? It's not just because it's never done anything. It's just because they had it when it did do something at some point, and they want to relive the glory days. A lot of people that watch this channel are about my age, right? I was born in 1990, and I look at this gold chart, and I if I were to draw on here when I was born, it was right here, right in 1990. So the only bull market that gold has really had, an impressive bull market, was when I was still a kid, right? I mean, the rally it started in 2001. I was only 11 years old, right? So you'll have to forgive me for not being on the gold bandwagon back then, right? It's not like I was on my way to middle school, I was checking the price of gold. But again, there are people that have seen these really impressive rallies before, and so that's why you'll see the gold bugs, right? The same thing can happen to Bitcoiners too, eventually, right? It's possible. In fact, this rally over here by gold looks eerily similar to the Bitcoin rally in 2013, sort of that double peak cycle. But the thing about gold is that these rallies don't take place over a year or two. They take place over a decade, right? These are monthly candles, 118 months. You're talking about a decade-long move. Here, 120 months, right? 124 months, a decade-long move. And so what I think a lot of people do is they treat gold like they treat an altcoin or something, where they try to flip it over a day or a month to make some money. But gold is one of those investments, if you're going to have it in your portfolio, is, and I do own gold, for full disclosure, right? But it's a relatively small amount because, as I've said, over a longer period of time, gold underperforms the S&P 500. But I still think it's worthwhile to hedge occasionally because, for instance, during this period right here, when gold went up, 600% from 2000 to 2011 or so, during that same period, the S&P was basically flat because of the dot-com crash and the financial crisis. So you basically had a lost decade while gold went up 600%. Now, The last time I made a video on gold, I think it was around 2000. And I said, look, guys, it's probably going to break out and it's probably going to get a move to 2,500. Okay. It's done that now. And now I'm like, all right, well, now what? Well, there is the bull market support band for gold. Now, the bull market support band for gold is different than for Bitcoin. So for Bitcoin, it's the 20-week SMA and the 21-week EMA, which, by the way, Bitcoin is currently back above. But for gold, for something that moves as slowly as gold, it's the 20-month SMA and the 21-month EMA. So it's a monthly moving average rather than a weekly. And you might say, well, what is the justification for that? Well, look at this bull market over here. Every single time that gold had a larger pullback, it always found support at the 20-month SMA and or 21-month EMA. The only time it went below this bull market support band in its decade-long bull market was during the financial crisis. So that shows you that even gold is not immune to some types of recessions where it dropped 33.8%. Now, I've tried to make this comparison to this bull market for gold, right? I mean, there's no denying that gold has been in a bull market. I mean, you could argue that it's been in a bull market since 2016, right? You know, it looks like it bottomed out here in 2016 and it's been slowly moving up. It didn't really get moving though until late 2018, early 2019. You see that? It didn't really get moving till then. But certainly any unbiased person would say, you know, this is just a series of higher lows and higher highs, but it takes place over a painstakingly long amount of time that it's hard to notice, right? It's hard to notice sometimes when gold's moving because a good day is for it to just move up 0.5%, right? That's a good day. Whereas for Bitcoin, if Bitcoin only were to go up 0.5% in a day, a lot of people would consider that to be down, right? They would consider that to be a red day almost if it's not going up a lot. And I mean, it's just crazy the different types of investors that sort of go to these different types of assets. But I would say this, right? I would say this. Gold is still set up in a relatively similar way as it was, you know, out of that 2019 rally. And basically, gold rallied even through the introduction of QE, right? So if you look at the introduction of QE started here in August 2019. Gold still, or September 2019, gold still rallied even after that, right? It did get a little bit of a pullback once QE came back, but it still continued to rally after that. So my speculation is that it will likely continue to rally. There will be some pullbacks, probably to the bull market support band. Right now, the bull market support band for it is all the way down at like 21 to 2200. So I'm not really sure if it's going to go that low, but I could see some occasional pullbacks, but I don't think it makes sense to sell in anticipation of those occasional pullbacks, not financial advice. I would just more so see that as an opportunity if you want to get exposure to gold, right? I mean, first of all, if you wanted it, right, you had plenty of time back over here. You're sort of waiting for the breakout to occur, just like it did in 2019. Now it has. So now the question is, well, how long could this go on for? One of the things to remember is that with gold, it's not like crypto, right? It's not like Bitcoin or Ethereum or any of that stuff. When it goes into bull markets, it can stay that way for a decade. Again, this was a decade-long bull market. I mean, yes, there was some downtrends in between, but these were massive bull markets. If you look at the bull market support band for gold this cycle, it's been above that level since 2019. It only fell below it once during the bear market of 2022. So I wonder if this fake out there is similar to that fake out right there. And then you see this, it comes back up, consolidates, gets a big push up, consolidates, and it just keeps on doing it. After that downturn right there in 2008, gold rallied for another 36 months, right? About 3 years. After this pullback, it's already been 22 months. But again, if it's going to follow that, you could argue that it could easily go, look, another 14 months will put it at the end of 2025. So I don't know if it's going to take place over that long of a period of time. But one of the things you could do is you connect the dots on these peaks and say, well, what if you connect the dots on these peaks? Where would that land gold? Well, it depends on when it hits it. If it hits it, say, the end of this year, it could be at 3160. If it were to hit it, say, the end of 2025, you know, it could obviously be 3,500 or so. Now, that might sound like a crazy number for gold, but remember, when it gets moving, it can really move for a while. I think the hard part is that you could get a scenario where gold does something like this, right? Where it gets a big sell-off and then consolidates until the bull market support band catches up, right? Like if it did something like this, where then the bull market support band catches up and then it goes up, and everyone during this time would be like, oh, see, gold's not going anywhere. But in reality, that would be a perfectly normal move. So when it comes to gold, you have to think of it kind of differently than crypto. Like, it's not something, generally speaking, that is worthwhile, in my opinion anyways, to flip on a shorter term period, right? It's not an altcoin. It's something that you could have in your portfolio if you want to hedge against the S&P becoming relatively flat for a while, right? If the S&P gets too overvalued and then there's another sell-off and whatnot, and you just kind of generally have risk-off conditions where the S&P isn't doing that great, gold could be a hedge against that, just like bonds could be, just like fixed income could be. But over a long enough period of time, gold will likely underperform the S&P 500, even though there are years where it outperforms the S&P 500. So over a long enough period of time, because of that, because over a long enough period of time, the S&P does tend to outperform gold. My thought process is that it makes more sense to have, a smaller position in gold than, say, like index funds, because index funds do generally outperform gold. But as a hedge in a portfolio, it's not necessarily a bad way to go, because it could help protect you if the S&P does, do something like this, right? Because if you overlay gold during that period, right? If you overlay gold during this period right here where the S&P was just kind of going nowhere, that was when gold was going absolutely parabolic. So, gold's been going parabolic, and, will there be another drop in the S&P 500 at some point? That's possible, right? It's certainly possible. And that's why I say gold could be a interesting hedge, right? It gives you some exposure to the upside. It's not that gold can't go down. You can see that even during some of these crazy bull markets that gold has had, it still went down. I mean, the financial crisis was a pretty large drop by gold. I mean, just to give you an idea of the drop, right, during the financial crisis, it was like a 35% move to the downside. Right? I mean, just to give you an idea of where that would put gold today, right, like a 35% drop would put gold all the way back at 1700, which I don't think many people have on their bingo card. The other thing that I've used to look at gold previously are the gold logarithmic regression trend line, the trend line here. And so I've pointed this idea out, right, that you have sort of an intermediate top, a visit back to the bull market support band, and then another bull market, right, which is probably what I've been arguing we're in right now, where the extension from the fair value for the second one is larger than the first, right? So the extension from the fair value right there was about 100%, but the extension from the fair value in 5 years later was, 450%. The extension here was about 92%, right? So really similar to that extension right there. So far, the extension from the fair value is only about 57%. Now, I'm not suggesting it's going to go 400% above the fair value, but I would suggest that it could certainly go higher than 57% above the fair value. The other thing to consider, by the way, though, is that it doesn't have to end in 2025, right? There exists a scenario where, you have these these breakout moments like 2019 and 2024. And then at some point here, right, it topped out, right? It topped out after QE returned about 6 months or so. So you could have an example where gold, does something like this. It rallies, QE returns, and then it kind of stagnates for a while. And then the next cycle, gold breaks out again, right? It ends up being another mid-cycle top for Bitcoin for the next cycle. And it just keeps doing something like that. And then you look back on it and you're like, oh, wow, the bull market lasted from 2018 until 2028 or something, right? Or 2029. That's always a possibility. Again, gold moves very slowly. I think it's easy to look at these bull markets and be like, oh, well, that would have been easy to ride. This was a 10-year bull market. And then this was a 10-year bull market. So why should anyone expect the move by gold to occur over a month or a week or even a year when history shows that bull markets for gold tend to last for a decade or so? So I would keep that in mind if you are interested in gold. So I would say the main two tools that I would use here, the main things I would be looking at would just be, all right, as long as gold is trending above its bull market support band, I think all systems are still go. That is all the way down at 2116 to 2165. So there's plenty of wiggle room in there. There will likely be pullbacks to its bull market support band along the way, just like there were in this bull market over here, and just like there were in this one over here. But when it's as long as it's above it, right? You also had a fake out below it in this bull market as well, right? So in both of the two last bull markets, there was basically one major fake out below the bull market support band, just like there was here in late 2022. So I think we're in sort of that second stretch here, and I think you're watching gold basically go parabolic as investors are starting to get concerned about potentially some of the labor market deterioration. And the more that the labor market deteriorates, the more it means that QE will be resuming soon, and interest rate cuts will continue, and gold likes that. So my general thought process on gold is that it will remain constructive. It will likely continue to put in higher lows. As long as it holds above the bull market support band, it still should be fine. I would get concerned if it were to get below the bull market support band. I don't even know if it has to retest the prior breakout point. Some of the times when you look at breakouts, you'll expect it to retest the breakout point. But if you look at 2019, it never retested that before continuing higher. So there's no guarantee that it has to retest this. And in fact, considering that the bull market support band for gold is above the prior breakout point, I would be inclined to say that it won't. More likely not to than it is to actually do that. I would say my general thought process, as I said, it's likely to remain constructive. My guess is that there will be pullbacks to the bull market support band throughout the bull market for gold, just like there were in this bull market and just like there were back over here, right? There was, different pullbacks to the bull market support band during the overall macro uptrend. But that it's not worthwhile, in my view, to sell in anticipation of that, but to use that as an opportunity. If you look at like the RSI, right? If we pull up the RSI for gold, you can see that it is getting relatively elevated, right? I mean, it's currently at around 80. Okay. The last time we saw gold break through, back over here in 2019, the RSI, the weekly RSI, it topped at around 84, right? 84. So I've been keeping my eye on that a little bit because that was also around the level that it topped out at during these sort of intermediate rallies in the last bull market. You see that? And then the final top was actually a much lower high, right? It was a much lower high, which is coincidentally where gold is right now, right? That's actually coincidentally where gold is right now. Is actually slightly above it right now. But what I would say, I wouldn't be surprised if gold's weekly RSI goes back up to like 83, 84, kind of like it did a couple times over here, right? And then maybe out in 2029 or something, it puts in a lower high or something. Something like that could happen. But anyways, those are my views on gold. We'll see what happens. I would say it's still likely going to be a long journey. It's not something that's like an altcoin that you're probably looking for a shorter term play. Anyways, if you guys like the content, make sure you subscribe, give the video a thumbs up, and again, check out Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.